Thank you for returning to our channel. We'll talk about how many Tesla shares you'll need to be able to live off of the money your shares generate passively. The number of pre-split shares required for retirement was previously discussed. However, after the split, a lot has changed. As Elon faces an onslaught of detractors from all sides and the future of Tesla appears fairly bleak, this is good news for those of us who know he will overcome. We can spend less to acquire the magic number of Tesla shares that would enable retirement now that the stock is at a steep discount. To learn more, keep watching and don't forget to subscribe and like. We'll discuss the worst-case scenario and longtime supporter of Tesla, Cathie Wood, in this video. I'll also highlight the many advantages that Tesla has, which will probably make the bear case scenario overly conservative. According to the bear scenario, 10 million cars will be sold for an average of $38,000. Sales of automobiles would bring in $380 billion as a result. We know that this 10 million is a roundup because it should be 380. The fact that Tesla's robot taxi services are not included in this figure is impressive. It is absurd that the robot taxi, also known as the autonomous ride vehicle, is valued at $51 billion. Even more impressive, though, is that the gross margin on electric cars is now 46% as opposed to 28% in the Q3 numbers. By 2026, the gross margin is a ridiculous 50%. Remarkably, the overall EBITDA margin is 37%, indicating effectiveness. In Q3, it was little over 23%, but by 2026, they expect it to reach 37%. That is completely crazy. However, since we typically determine enterprise value in the present, I'm interested in learning how they calculated it for 2026. Therefore, it should be cause for concern that they can extend until 2026, at least for me. They already know the exact amount of debt and money they will have. Do I agree that 9.8 million automobiles will be delivered by 2026? It can be excessive. It's estimated by some that by 2026, there will be at least 7 million, so we'll have to wait and see how things work out. According to Cathie's prediction, a 50% gross margin would generate about $250 billion in revenue, which would support the $967 stock price, which is $2,900 pre-split based on total gross profit after costs. However, Wood and ARK utilized enterprise value by EBITDA in their graphic rather than operating margin or costs. But by 2026, enterprise value needs to know how much cash and debt it has, so we'll discover out how they arrived at the $3.3 trillion market value and price of Tesla stock. It is reasonable to assume that by 2026, an operating margin of 30% will be reasonable if they are achieving 50% gross margins. In summary, the bear case presented by Cathie Wood projects that the share price of $2,900 pre-split would be roughly $967 per share, with a projected value of $4,600 per share by 2026. Following a 3-for-1 equity split, each share would be worth $1,533. You would need 1,108 Tesla shares to attain a safe retirement amount, which is $1.7 million per individual based on a recent poll. The worst-case situation entails 1,108 Tesla shares. Given that Tesla shares are currently trading at $123 a share, investing roughly $136,400 today would be necessary to reach the threshold for retirement assurance. That's not all that horrible. Let's now examine current market patterns and why, in my opinion, the bear case is far too cautious given these developments. After experiencing several highs and lows, Tesla is currently trending lower. In the preceding weeks, there have been multiple declines in the stock price, with consistently negative results. But given the cheap price at which Tesla stock is now trading, may purchasing the stock now enable some people to retire on potential future gains for Tesla? Indeed, if Tesla can successfully navigate this market and maintain its current trajectory, this is a great opportunity to purchase stock in the company. In light of Tesla's market potential, How many shares would you need to buy now in order to retire in 2027? Although there have been and probably will be further downturns for Tesla, these are anticipated to be small given the stock's potential. Whether or not Tesla can achieve a high price in 2027 is the question. Regardless of whether Tesla is a great stock to purchase or not, the data suggests that now might be a great moment to invest in the company for the future. Remember that Tesla's success has propelled us into multiple bull markets on its own. Some analysts thought Tesla was overpriced even at that point. In order to enhance manufacturing and broaden its market reach, the EV brand has recently worked with businesses like Lucid, Rivian, and Neo and entered new markets. Many investors predict that the stock price will exceed $2,500 by 2025. Well-known individuals, like as Cathie would, believe the stock will surpass $3,000 by 2030. Their track record shows that they may be onto something big for Tesla. Based on a thorough analysis of Tesla's stock performance and future prospects, these projections have been made. With 108,600 cars delivered in the most recent quarter, Tesla just exceeded consensus projections, demonstrating a tremendous rise in production and delivery over the previous 2 years. While most workers eagerly anticipate retirement, very few retirees actually put in the work necessary to sustain above-average financial stability in their later years. If you invested your money in a high-value stock with solid growth potential, how many Tesla shares would you need in your portfolio to retire in 5 years? Shall we perform some calculations? As I previously stated, according to a recent survey, the average person requires roughly $1.7 million to live well in retirement. Now let's consider a somewhat more positive scenario for Tesla than the bear case presented by Cathie Wood earlier. In this case, you would require roughly 850 shares of Tesla stock at current time if the price of a single share of the company hits $2,000 in 2027. Given the present price of Tesla, this will only come to roughly $104,000, and if the company lives up to expectations, which we really hope it does, there might be a significant profit. Future price increases for Tesla's shares are possible due to a number of intriguing projects. Elon Musk, the CEO of Tesla, stated at the outset that the company's main objective was to produce a high-performance car, use the proceeds to produce a car that was more affordable, and then use those profits to produce even more vehicles that offered options for producing electricity without emitting any emissions. According to Musk, the humanoid robot project may eventually take precedence over the automotive industry and may even lessen the need for physical labor, which would be advantageous for companies as it would cut labor costs. Similarly, Tesla's Model 2 is a noteworthy project that has the potential to upend and revolutionize the field of artificial intelligence if it is successful. However, supporters of Tesla remain vigilant about any potential updates. According to Musk, the Cybertruck from Tesla might be available for purchase in a few months. One of Tesla's issues was that it was unable to produce 4680 battery cells in time for the Cybertruck, which caused production to be delayed beyond its initial 2021 deadline. Furthermore, he stated that production would not begin until the Texas Gigafactory began producing the new Model Y. It's therefore good that the truck's construction started in 2022. Fans of Tesla are eagerly awaiting the 2023 release of the Cybertruck. Musk has reaffirmed this, stating that Tesla plans to complete the Cybertruck's development by year's end and have it prepared for manufacturing by 2023. Tesla has declared its goal to produce self-driving taxis. The robo-taxi that Tesla is developing is expected to have some really nice features. The car will be extremely comfortable for its occupants and built for various uses. For everybody who enjoys innovative and intriguing projects, this can be a promising endeavor, not only for Tesla enthusiasts. This, together with the fact that the robo-taxis are designed to offer the lowest cost per mile of transportation yet encountered, may establish them as the next big thing in commercial transportation. Elon, the CEO of the firm, understood that the project would be difficult due to its high battery requirements. Renewable energy sources like solar and wind power could be beneficial for clean transportation, but if Tesla can figure out how to produce its own energy, it will have a significant advantage over rivals. With Tesla's growth stock projected to remain at the top of the market for some time and the company's arguably established industry reputation, researching an investment in a growth stock could be a solid retirement strategy for 2027. While many people aspire to live worry-free in retirement, very few really take the required actions to make that a reality. Even many retired individuals still require a retirement plan, your employer's 401, and an IRA used to be your only retirement options, but it's obvious that these are no longer dependable in light of the most recent criteria adjustments. The 4% criterion that was previously in place has been affected by inflation, and in contrast to common opinion, your demands do not go down when you retire. But since this isn't always the case, it's critical to make prudent investments now in order to plan for the future. That means that the number of Tesla shares you'll need to maintain your financial stability after retirement will depend on your annual cost. Please share your thoughts with us in the space provided below for comments. Give this video a thumbs up if you found it helpful, and if you're, click the subscribe button and notification bell if you're new to our channel. I'll see you in the videos that follow.